Hello, everybody, and welcome to this webinar on NRGI's new framework, National Oil Company Transformation, Strategic Choices for an Uncertain Energy Future. Thanks so much to all of you for joining us today. For those of you who I don't know, my name is Patrick Heller, and I'm the Chief Program Officer here at the Natural Resource Governance Institute. It's a real pleasure to have so many of you with us from all around the world. We had more than 150 people register for this event from across Africa, the Americas, Asia, Europe, all over the world, essentially. And I'm really grateful to all of you for coming and spending some time with us today to speak about this very important topic. Um, I'm going to start with a couple of quick housekeeping notes. One is that for those of you who are interested, we have interpretation into Spanish. And the way you do that in the Zoom webinar is you should either see a globe down at the bottom of your screen, or if you don't see a globe, you can click on the button that says more with three dots, and that will take you to the interpretation. Um, just to start with a couple of words about us, who we are, for those of you who don't know NRGI very well. NRGI is a not-for-profit think tank and advocacy organization that really focuses on trying to build a world where natural resources enable sustainable, prosperous, and fair societies rather than undermining them. And it's actually our 20th anniversary this year. And so this has been a moment for us of reflecting on what we collectively in the natural resource governance movement have accomplished, but also the real tough and serious challenges that lay ahead of all of us as well. Right from the beginning of our work as an organization, national oil companies and national oil company governance has been at the heart of our mission as an organization. I probably don't need to emphasize it too much to all of you who volunteered to join this call, but just to put it in perspective, national oil companies produce more than half of the world's oil and gas. And last year, they spent in CapEx more than three times the amount that international oil majors spent. So they're dominant players in the global oil and gas marketplace. Equally importantly, for our purposes, they're dominant players within their own societies, their own economies, their own energy systems. And the choices that NOCs make and the ways in which they are governed can play an oversized role in the futures and the prosperity and the sustainability of their societies. So for years, we in NRGI and many of the others around the call, including our discussants, have focused quite a lot on how to support good governance of NOCs, how to work with governments and civil societies to hold NOCs accountable, and steps that have been demonstrated to help these companies achieve their missions and avoid some of the challenges that many of them have faced. Over the last several years, our work has increasingly come to focus not just on how NOCs can achieve their missions, but reflecting increasingly on their futures and how they chart the course for their futures and how their governments and their citizens shape the ways in which NOCs think about what strategies they can undertake in the future. That's really what led us to this work that we're sharing with you today, which in particular is focused on the impacts of the global energy transition with all of its uncertainties, but the risks that are associated with sticking with a business as usual approach without reflecting on how business strategies and how approaches need to evolve. We've worked for the last few years, especially starting on the risks associated with NOC strategies that don't account for the uncertainties in global energy markets. About a year and a half ago, we produced a survey that looked at whether NOCs or how many NOCs were really doing comprehensive planning around energy transition risks and what it meant for their businesses. And we found that the majority of the companies that we looked at weren't yet really integrating energy transition risk in a systematic way into the ways in which they were thinking about their own portfolios and the impact of what they do on their broader economies, the state of energy in their countries and globally. And In the year and a half since that research came out, what we've seen is the conversation is continuing to shift and evolve in important ways. So, one thing that we see happening is more and more NOCs that are starting often in piecemeal ways, but in meaningful ways to wrestle with these issues more significantly. So, we're seeing companies that are doing more systematic risk analysis of their own oil and gas portfolios to see under what circumstances, under what assumptions about future oil and gas demand do our portfolios break even, and what does that mean for our choices about where to invest and where not to invest? We're also seeing more and more companies experiment with, explore, consider investments in new business areas outside of what have traditionally been seen as their core competencies. And fundamentally, what led to this report was the kinds of questions and ideas that we heard from governments and NOCs across the world where we're working, who said, "Okay, we understand the importance of focusing on risk. We understand that it matters if we spend a dollar today that doesn't generate a return tomorrow because of the energy transition. But we can't just focus on risk. We have to think about what our futures look like and how we evolve our strategies and our strategic approaches." That's what prompted us to try to build out this framework that we'll be sharing with you today. The idea here is to look at some structured ways in which governments, citizens, and NOCs themselves can assess both how do we think about the evolution of our oil and gas portfolios? How do we manage and navigate risks? How do we take advantage of opportunities? Um, how do we spend the money that we're generating today? Um, but also is looking at some strategic questions to frame considerations around um, when it makes sense for the NOC to extend its mandate into new areas. What are some ways in which governments can think about the opportunities associated with that? What are some of the challenges and what are some of the tough questions? That's what we'll be digging into over the course of this next hour. The framework, which my colleague Andrea Furnaro will be sharing in detail momentarily, is really designed to provide a structured set of questions that governments and national oil companies can ask to inform decisions about the future of these entities, to get these companies on a transformation agenda or a transformation pathway. And I want to be clear, these are tough questions. And the questions around what sorts of mandates make sense for different kinds of NOCs and different moments, in different moments, are not obvious. And so the conclusion for every NOC at every moment in time will not be we should become an energy company or we should invest in these new areas of business. But what we wanted to do was to provide some structure and some ideas on how to wrestle with and how to tackle these questions in a significant and systematic way. That's what we'll be here to do today. Um, One thing that I want to note before turning it over to the details for today is we know this is a moment of crisis in the world. We know it's a moment of crisis in global energy markets. We know that the conflict in the Middle East and conflicts across the world are introducing uncertainty and stress and worry into the marketplace and into people's lives at a more fundamental level. Um, in our view, this doesn't obviate the need to look in a serious way at the future. It actually underscores how important it is to wrestle with uncertainty, to wrestle with volatility, and to think about how to get on a path that is more stable and sustainable for the citizens of oil and gas producing countries who fundamentally are the people who our work is trying to serve and support. What we're going to do now is my colleague Andrea Furnaro, NRGI's senior policy analyst and one of the leading drivers of this research, is going to share the framework with you. Then we'll have some reflections from a fantastic group of discussants. And then after that, we will take and respond to your questions, both Andrea herself and the panelists as well. And so what I would encourage you to do is, as you're hearing the presentation of Andrea and the reflections of our discussants, who I'll introduce in due course. Please feel free to put questions into the chat. We'll try to curate those as best we can and get to as many of them as possible, both replying in the chat, but also in the discussion at the end of the session. So without further ado, and again, with thanks to all of you for joining, Andrea, I'm going to turn it over to you to get into the framework.
Great. So thank you, Patrick, for the introduction, and thanks everyone for joining us today. I'm very glad to have the opportunity to share this report with you. It presents new analysis, but it also draws on several years of NRGI's work on national oil companies. And I think this report really represents an important step in that broader research agenda. The report is the result of a very collaborative effort across colleagues working in different countries in NRGI, but also across different areas such as oil and gas governance, but also industrial policy and the energy transition. And I think this diversity of expertise comes through clearly in the report, in the final result. So in very basic terms, what we try to do in this report is both explain why the question of NOC transformation is so important, and also offer a practical framework, as Patrick was saying, that allows different actors think through the strategic choices that governments and NOCs face. So in the next few minutes, I want to do two things. First, I want to briefly explain why this conversation about NOC transformation is so timely and important. And second, I want to summarize the framework presented in this report and provide some of the examples that help illustrate our points. So I don't really think I need a chart to make the point that uncertainty in the energy sector is much higher today. You can notice this simply by following the news. But I think it's still useful to ask whether there are certain ways of observing this uncertainty more systematically. There are different ways of doing this. This chart, I'm showing you one way, which is looking at scenario dispersion, which is basically the distance between different projections for the future. So the wider the spread is, the greater the uncertainty around what the future might look like. And here I'm focusing on two comparable scenarios from the International Energy Agency that you probably know well, from the 2019 and 2025 outlooks, the current policy scenario and the state policy scenarios. And I selected this here just to show you that they reflect relatively plausible rather than the most extreme cases in either side. And of course, it is normal for scenarios to diverge more the further out they look, right? So we will expect more disagreement about the outlook 30 years ahead than about the near term. But what is especially telling here is what happened even around the 10-year horizon. Here, the dispersion almost doubles. So even before the current Middle East crisis, the range of plausible futures had already widened significantly. And what matters of this is that the planning for national oil companies and for governments become more difficult. But also, this is what we are going to argue in this report, more necessary. And that's exactly the challenge that this report is trying to address. And although I will say that it's hard to imagine actors that are more used to dealing with uncertainty than oil companies in general, the uncertainty NOCs face today is different. It is not only about the geopolitics and cyclical shocks, but also about the added pressures of global electrification and the possibility of further structural changes ahead. And as the chart shows, this is reflected not only in the greater dispersion across scenario, but also in the downward revision in projected oil demand over time. So in this report, we define transformation as the proactive choices that governments and NOCs can make in response not only to pressures of the global energy transition, but also to opportunities that the global energy transition and other market changes may open up. And that matters because this is not a report only about risk, as Patrick was highlighting, and it is not only about changes within the NOCs, within the companies themselves. It is about the broader question of how countries navigate the energy transition while balancing development priorities, economic resilience, energy security, and also climate goals. This report aims to encourage dialogue and help governments, NOCs, and also other stakeholders think through the choices they face in an uncertain energy future. It is not a one-size-fits-all model. It doesn't prescribe a single ideal pathway for all NOCs, and it's not an implementation guide, kind of telling governments exactly how to design and sequence transformation. Rather, it offers a framework to help organize the discussion, to help highlight the issues that need to be considered. And I think the report is useful because it unpacks many of these issues and issues to consider in detail. These are the kind of decisions that can shape the next 10, 20, or even 30 years of NOCs and their countries' development. And we argue in this report that this is the kind of long-term vision and planning that becomes even more important in a highly uncertain energy future. At the center of the report is a 5-step framework. Step 1 is about setting national level policy goals. Ideally, this helps guide the whole process because without clarity on what the government wants the NOC to deliver, whether public revenues, energy security, industrial development, or even adaptation to the global energy transition, the rest of the discussion, the rest of the steps can easily become fragmented. But in many countries, in many contexts, these goals cannot be fully defined at the outset, given political challenges and other. And we argue that that should not stop progress on the other steps. And that's why we treat this as a concurrent and iterative step rather than something that always happens first. In the report, you will find the case of Thailand's State Enterprise Policy Committee as a case of a more centralized institutional arrangement for setting objectives at the national level and monitoring performance across state-owned enterprises. Step 2 is about assessing transition risk and also assessing new business opportunities. This involves assessing how exposed the NOC and also the national economy are under different plausible futures and identifying realistic opportunities to diversify the NOC. Here, the report draws on NRGI's earlier scenario analysis of transition risk. It also builds on our previous research that Patrick mentioned, our 2023 report, Facing the Future, which showed that many NOCs are already starting to use international frameworks to assess transition risk, especially where they face stronger pressure from the financial sector. And in many cases, these are climate disclosure frameworks, as we see that is, and we believe this is a very important step. But in the report, we also argue that in the case of NOCs, these kind of assessments need to go further. NOCs are not any other oil company, right? So it needs to consider not only the risks facing the company, but also the risks facing the country and the capacity of both the NOC and the country to absorb them. So here risk in the report is broken down into more concrete components: exposure, likelihood, impact, and resilience capacity, again, for both the NOC and the country. This step also looks at how energy security can complicate these assessments of transition risk, as well as the specific risk facing NOCs with significant gas portfolios. Step 2 then turns to diversification, asking where there may be realistic opportunities and what broader or also more limited levels of opportunities and risk mean for different countries and their NOCs. Step 3 is about defining the direction of change and the general business focus. And this is where the report asks some of the hardest questions, I would say, like how much public resources should remain in oil and gas, and how much should move into new sectors, and when might public resources be better deployed outside the NOC. In this step, we use several examples to make these different pathways more concrete. Of course, the case of Dawn transformation into Ørsted in Denmark as a rare case of what we describe in this report as full industrial transformation, because the company moved away from oil and gas and reinvested in offshore wind as a new core business. But we also include examples such as Petrobras and Equinor that we describe as examples of diversification efforts that are still unfolding. And we also include the case of Japan JNOC as a very different case of wind down and institutional reallocation, because as we explain in the report, the NOC itself was dissolved, but some of its strategic functions continued to through a public agency called JOGMEC, which is not a conventional NOC, but rather a public financing and energy security institution. Step 4 then turns to institutional setup and governance. Here the report draws on examples such as Singapore's Temasek as a state holding company that can help coordinate state-owned firms, China's state-owned Asset Supervision and Administration Commission as a more centralized system for overseeing major state-owned enterprises, including NOCs, and also the case of Ecopetrol acquisition of ISA, which is Colombia's electricity transmission company. And I think this is a useful example of how existing electricity sector regulations in a country can shape, but sometimes also constrain how far NOC diversification into the power sector can go. Finally, step 5 focuses on just transition and responsible exit. This includes the social and environmental dimensions of transformation, especially those that arise when NOCs sell assets, acquire assets, or wind down operations in the commission projects. And here we insist that transformation is not credible if it ignores workers, communities, environmental liabilities, and also the political economy and the politics of public legitimacy. We present several examples in this step, such as Petronas on labor transition, reskilling, and worker support, Petrobras and Ecopetrol on subnational economic diversification through training and social investment, and Petrosei, which is an interesting case of environmental remediation and site repurposing, particularly in the case of refinery infrastructure for clean energy use. So to conclude, I want to leave you with one of the report's central ideas, which is that NOC transformation is best understood as a range of possible pathways rather than a single model. However, we argue that business as usual, understood here as continuing to expand oil and gas without seriously addressing transition risks or building new opportunities, is not treated as a neutral option. Maybe for some lower cost NOCs, a more gradual or limited transformation pathway may remain central to preserving public value, but even in those cases, that requires active risk management and strategic planning, so no simply continuity. And in that sense, any meaningful transformation process begins by confronting risks and opportunities directly. Transformation can take place along two main dimensions. One is the extent to which the NOC reduces its exposure to oil and gas activity, and the other is the extent to which it expands into new sectors. And reduction in oil and gas activities can take different forms, ranging from divesting higher risk assets to stopping new oil and gas investment to a full wind down of oil and gas operation, as in the case of JNOC in Japan. And at the same time, expansion into new sectors can also differ in depth, ranging from what we describe in the report as partial diversification to deeper diversification to a full industrial transformation, as in the case of Dong in Denmark. And I want to highlight that recognizing these two directions is important because transformation is not necessarily about turning an NOC into a renewable energy company, as I will say many analyses tend to take for granted. In some contexts, the most useful path may be to become a more resilient oil and gas company by, for example, reducing exposure to oil and gas. In other, expansion into new sectors may make sense, but only where the NOC has real advantages and where that investment serves broader national goals. Otherwise, we argue that pushing the NOC into new areas can divert scarce public capital or crowd out other public or private actors that may be better place to lead. And this is something we have argued as well in other of NRGI works previously. So in different sections of the report, we discuss diversification in much more concrete ways. We discuss which new sectors might actually fit the capabilities that NOCs already have. But the broader point is that transformation is about the degree, the pace, and the direction of change, how much oil and gas activities reduced, whether the NOC expands into new sector, and how these choices reflect each country's priorities, institutional setting, resource endowments, and the NOC's own capabilities and constraints. So what I have presented here is only the top layer of the report. The full report goes much further in details and examples. You will find wider range of examples and empirical cases and practical guiding questions that can be used, as we mentioned before, by policymakers, NOC leaders, but also researchers and advocates. So yeah, if you haven't had the chance to read it yet, I will really encourage you to do so. And thank you very much, and looking forward to a conversation.
Thank you very much, Andrea. And echoing what you said, I encourage everyone to click on the link as provided and explore the report. And we're interested to hear what you think. We're going to now turn it over to three discussants who I feel really fortunate to have with us here today, who are wrestling with these issues in various different ways and in the settings in which their work is focused. First, we'll hear from Chinedu Igwe, who's living these questions every day as the head of sustainability at the Nigerian National Petroleum Corporation, where he leads the company's work on ESG and climate strategy. Chinedu brings more than 2 decades of experience across engineering, commercial strategy, and negotiations, and he's looking in a broad and cohesive way at the way in which NNPC is tackling these issues. After Chinedu, we'll hear from Valerie Marcel, who's the co-founder and executive director of New Producers for Sustainable Energy, which supports producer countries, emerging producer countries on energy and governance. That means the group and the project focuses on countries that are relatively new to the oil and gas business and are trying to figure out how to take advantage of their opportunities in the sector, but also manage for the future in a sustainable way. Valerie has for years been a leading voice on national oil companies and petroleum sector governance, including a longstanding role at Chatham House. And then last but not least, we'll hear from Francisco Monaldi, who's the director of the Latin America Energy Program at the Baker Institute for Public Policy at Rice University. Francisco is a leading scholar on the politics and economics of energy and resource policy in Latin America, and he advises governments, international institutions, and energy companies across the region and the world. So fantastic to have all of you with us, and thank you very much. And the question that I'm going to pose to each of you is a relatively straightforward one, reflecting on the NOC transformation framework that Andrea has just shared, and in the context of either the country or the company that you're working for directly in Chinedu's case, and in the case of Valerie and Francisco, the regions and the kinds of companies you're most focused on. Which steps seem most important for governments and NOCs, and what are the most important priorities as they try to shape an agenda for resilience and transformation in the future? Um, I I know all of our panelists. They know that I am a strict moderator when it comes to time, and so I'll give you all a 1 minute warning. But you each have 5 minutes to share your reflections on that question, starting with you, Chinedu, and thank you so much for being with us today.
Thank you so much, Patrick. And thank you so much for sharing the NRGI framework, NRGI framework, which has really been a well thought out, laid out plan, in how decisions can be made, in the energy transition. So I would say really, first important steps for us would be governance heavy steps really. So I'll say step 1, 4, and 5. You know, step 2 and 3 matter, but that will depend on a solid governance structure that we have in place. So because for us in Nigeria and working from the NOC, NNPC, the Nigerian National Petroleum Company, we do not have a resource problem. What we need to address is governance, sequencing, and execution challenges. So for Nigeria, we still hold 37.01 billion barrels of crude oil and condensate reserves and 215.190 TCF of gas reserves. And national production just got to 1.84 million barrels per day. So the issue for us is not whether there is a resource base. The issue is whether the states and the NOC are governing that resource base for resilience. So the step 1 that's critical is to set the national mandate clearly for us. So the government then must decide what it wants the NOC to optimize for. Is it fiscal revenue, domestic energy security? Is it a gas-led industrialization, affordability, or lower emissions? Or is it some disciplined combination of all 5? An estimate from us at the National Oil Company, it will take us like around $30 billion, to achieve a full net zero goals. So now we then have to balance this clarity with the data that tells us the dual reality of Nigeria, where in Q4 2025, the non-oil sector accounted for 97.13% of real GDP, which implies that oil was just about 2.87% of the real GDP. But in Q1 2025, we see crude oil accounting for 62.89% of the total exports. So it means that oil for us is no longer the economy, but it's still central to external resilience. If government does not define that balance clearly, the NOC will keep carrying conflicting expectations. Then step 4 of the governance framework helps us become decisive, building the governance and execution system. When we look at it, there's been a lot of talk, at the national level. So for us, then transformation either becomes real or dies in PowerPoint presentations. For instance, in July 2025, we produced 7.5 BCF of gas per day, reduced flaring, and increased our gas to power supply. And the transition program kicked off, and we expected to capture around 250 mmscf of gas from it with around $2 billion investment and create around over 100,000 jobs. So these are governance numbers, really. So they show what happens when regulation, commercial incentives, and operational execution begin to align. So when governance becomes measurable for us, it then helps us to transition properly and build the resilience in the right direction, requiring less estimation, more measurements, less rhetoric, and more accountability. Then step 5 then is also very important because that helps us to establish for a national oil company, because we cannot just talk about returns for a national oil company. We still have 85 million Nigerians that still lack electricity. So our agenda then must be tied to the domestic view, however, to create jobs, improve electricity. So legitimacy then means that we're able to link our transformation as an NOC to jobs, power, gas utilization, emissions reductions, and national productivity. So if we reduce this Nigerian point of view to one sentence, which is what I would say, that the NRGI framework is right for us, establishing governance as a priority, and then clarifying mandates, hardwiring execution, and protecting legitimacy. So in all, we could just put it in 3 words for us in our choice: the mandates, the discipline, and legitimacy. This is how we, Nigeria and the NOC, can move from transition ambition to transformation resilience. Thank you. I hope
Thank
I
you.
stayed within time. Yeah.
Yeah, absolutely. Yeah. Thank you so much, Chinedu, and really rich reflections on the importance of making governance measurable and core to all of this, the importance of prioritizing across diverse objectives, um, and linking the NOC plans to key national priorities. So, a really rich reflection. Thank you very much. Valerie, I'm going to turn it over to you to share reflections, especially around how some of these questions are impacting new producers and the world in which you're so immersed. Thank you very much.
Thanks so much, Patrick. And it's great to be here to talk about this really important report. I think to situate a little the types of NOCs that I'll be referring to from the new producers for sustainable energy, it's national oil companies from countries that are sometimes producers, sometimes not yet produced. We're talking about, Uganda, Tanzania, Mozambique, Timor-Leste, Ghana. And so these are national oil companies that are not operators. So international oil companies are in the lead in making the development decisions for the project. So the types of questions that have, determining what role adds value for the country will be a little different than an NNPC and some of the ones that I think Francisco will cover in Latin America. So they're broadly importing their energy needs, these countries. The national oil companies handling the sales of crude oil and gas. So they have a set of constraints, and that affects how government would see their role. To answer your question on what of the 5 steps or is most important, I think, for these types of NOCs, and especially for their governments, I'd say it's really number 1, which is having a clarity around national goals. And that is really the cornerstone of good governance. And it's critical in the context of the energy transition, where there's a window of opportunity, and these NOCs must make decisions about what direction they take with a shorter window for bringing value to their country. So thinking about what role would add the most value, all of the NOCs that we're working with, the main role is really to increase the size of the slice of the pie. So basically to have a greater share of oil and gas come to the state and a greater share of the revenue. But some NOCs are tempted to try to make the pie bigger, so invest in the oil and gas project. And I think that's something that carries more risks, and that's really what this report addresses, is looking at the break-even prices and how much money you want to put into an oil and gas project when it's close to a higher break-even price. The other kind of role is really about adding value through the investing through the value chain. And this is the area that I think has will become quite critical in light of the major energy crisis that we're in right now. Because some countries with energy risks right now, import dependency, will be tempted to think about refining for their NOCs, or to increase storage capacity, to increase infrastructure investments. And some of these things might well make sense, but it is definitely a riskier set of investments, especially when you're thinking about refining. But Equally, they may also really be expected to turn more towards renewable energy investment. So it's quite interesting how this context now is going to bring those questions to the fore. And so some of these things I'm talking about are really in the business as usual pathway, and others are more formative. But the business as usual is really about going deeper into oil and gas for a country that is energy insecure and has energy access issues. It's the NOC can be certainly seen as a tool in addressing these challenges. I think, the opportunities are to bring more revenue to the state, more energy to the country through NOC. The risks are that the pie becomes smaller because costs are higher than expected, and oil and gas prices are lower than expected over time, or that roles are more costly. So I think, the key questions I think for government are really to think, can their NOCs do this well? Can they finance what they want to do? And that's unfortunately a huge limitation for a lot of these energy constrained countries. And if the NOC doesn't do it, who will do it? So if there's really no other act to meet energy needs, it's the reality is that maybe the NOC does so, even though it may not be the best suited to do it. So I think for government, the bottom line is really to have clarity on the hierarchy of priorities. Is this energy security more important than revenues to Treasury? And yeah, I think just having that clarity is the most important thing.
Thank you very much, Valerie. Really valuable. And again, coming back on this theme of prioritization and making choices and aligning what the NOC is doing with what the state priorities and objectives are. So critical in this space. Francisco, over to you. I know these questions are very live in Latin America and very interested in your reflections.
Sure. Thank you, Patrick. It's always a pleasure to collaborate with NRGI. And I've been doing it since the very beginning, 20 years ago, and I think you do a great job. And I think that this report shows exactly that, because it's a report that at the same time embraces sort of the complexity of this issue in terms of how different NOCs are, different countries have different endowments, different capabilities, different institutions, but at the same time, it does create a structure that is simple enough and cohesive enough to analyze the different cases. So I really congratulate the team for this report. I think I agree with Valerie that a very important element, of course, is to consider this at the government or state level, the policy objectives, because the NOC has some significant conflicts of interest in terms of analyzing what is their own role in the future. And I think it's really important to set these goals at the state level and with a long-term horizon. You can see it, for example, in companies like Pemex that have had a lot of financial difficulties and have not necessarily been aligned with the the long-term interest of the Mexican state in some of the reforms that they have been trying to implement in the past. I think a very very important element is all these issues about the different sort of endowments and risk and opportunities of different companies. I think this clearly shows in Latin America. You have companies like Petrobras that are quite capable, that are very good operators, that were willing to be on the frontier of developing deep waters, that also have venture into biofuels and other areas with relative success. And even also, I think it's very important that a company like Petrobras has been able to work in other countries. That shows that they are a competitive company. But at the same time, there are companies that are either not operators or have very limited capacities or have shown very significant inefficiencies, like PDVSA and Pemex, that have to, you have to really consider that element. And the same is sort of the risk, the capacity to manage risk of a country. It's very different. The case of Brazil, a very diversified, large economy that the oil is important, but it's not dependent on it, than, of course, other economies in which this is basically the main sector, and the risk appetite of the country and the capacity to manage those risks is very different. And I think it's really important to understand all these factors to really be able to implement a good strategy. I think it's important to consider that there is another choice, right? That is that another private company, or even another NOC from another company, takes some of the risk, or all of the risks involved in the activity, and so that's very different from taking them by the national oil company. Finally, I think it's very important also to understand all these map of endowments, institutions, institutional capabilities, to know if moving into other ventures would be feasible. I think in most cases, NOCs are not the best to move into some businesses which have lower margins, who require a lot more efficiency. And so it might be that another state-owned enterprise or the private sector could play a bigger role there. So I think that in some of these cases, the most important actual element is the political economy of how are you going to downsize the NOC in the future. And of course, also to look at different scenarios, because without a doubt, as was pointed out, we have very different scenarios in which the companies with an endowment that is more carbon intensive, or more focused on gas, or have more reserves, would have a very different future. So thank you for that. Let me stop this.
Thanks so much, Francisco. And I really liked in particular your focus on what it means to kind of share risks and collaborate across the NOC, different other state-owned actors and private investors in balancing these risks and opportunities, and to not think of the NOC in isolation, but rather to think about it in the context of the broader ecosystem within the country as well as internationally. Fantastic. Well, thanks so much to all of you, all of the discussants. We have quite an active chat, and as you'll see, Andrea has been replying to a few of the questions as we go. I want to take and throw it open, maybe first to you, Andrea, but then other panelists, if you have any reactions. The question that was put in the chat by Roberto Lozano. Until a few years ago, many believed that for NOCs to stay in business, they would have to decarbonize their operations, essentially transforming themselves into national energy companies. However, this hasn't happened with the exception of a few cases, and probably they are not well suited to achieve transformation and be competitive against purely low clean companies. What do you think of this shift?
Yeah.
I know it's one of the things we really got into in the report is how do NOCs and their governments think about when those opportunities really exist, and how to avoid going into ventures for which they're not well suited? Any reflections? Welcome. And then just to the other panelists, if any of you has a view on this question in particular, please feel free to come in. Go ahead, Andrea.
This is not that different to what we are seeing in the case of IOCs and the retreat as well from renewable energy investment. I think we are in a moment in general, not only for national oil companies, of maybe more pragmatism in this kind of decision, which I think is good, because as we argue in the report, it's good to have that pragmatism to think through what is really where the NOCs have value to add. So yes, but I also think there is a mix, right? That we are still seeing NOCs that are starting to participate, for example, in the lithium sector, and other areas. So I think also that how I understand energy is becoming broader as well. We also are seeing examples such as Ecopetrol acquisition of ISA, which is quite interesting. What I think is key in the case of NOCs, beyond the comparison with IOCs and whether they are following a similar path of like investing less directly in renewable energies, is that, and it's something that we argue very explicitly in the report, is that we need to understand the NOCs in the broader energy policy of the countries, because they will keep playing a very important role in energy security, for example. They can and are playing in many countries an important lock-in role in terms of domestic consumption of fossil fuels, for example. So I do think, independently of the assessment of whether the NOC should directly participate in these sectors or not, the kind of regulatory and policy assessment of what is the role in the energy sector and energy security. For example, I find super interesting how Ecopetrol and in Colombia has been argued the importance of, potentially the strategic importance of Ecopetrol in the transmission sector for promoting the domestic energy transition. So yeah, I think I see those changes. Those are, I do think the response for more this more pragmatism, but I think it's important to keep thinking about them for the perspective of NOCs and the role in the energy ecosystem and energy security and the energy sector in the countries.
Thank you, Andrea. Did any of the other discussants want to come in on this question? Yeah, Valerie, and then Francisco. Please, Valerie.
Yeah, thanks. I take decarbonization of NOCs to mean decarbonizing their operations, which means to really reduce the carbon intensity of their oil and gas production and scope 1 and 2. So I think that is the absolute requirement of national oil companies right now. And I think if you think of the fact that we will be continuing to consume oil and gas for decades, the ability of NOCs to do this is the most important contribution they can make to climate change, because we will need that lower carbon and lower methane oil and gas. So I think it's a critical role, and they can't get away with not doing it well.
Thanks, Valerie. Francisco.
Yes, I wanted to stress a point that both the one that Andrea made and Valerie. I mean, international oil companies are facing, as we know, very similar challenges. Some of them embarked in an aggressive move towards renewable and transition, and then decided to step back, partly in their cases because their shareholders were unhappy with the return of those activities that are typically lower margin, that are in sectors that are more regulated, that are don't oftentimes generate foreign exchange. So it is not easy for a company to manage the transition from these very different profiles of sectors. And I think NOCs are not different in that regard. And sometimes the motivations, I think it's very interesting. I mean, Ecopetrol is one of the best runs NOCs in the region. But the case of why they bought ISA, this is a company that is listed, Ecopetrol, and there was quite a debate if it was more of a play to give a big payoff to the government, or was actually a strategy of energy transition, or was actually a more sort of a strategy of complementing two very different streams of revenues, that one is much more stable, the other one much more volatile. So bottom line, there are very different questions in that regard. And finally, on the decarbonization issue, I do agree that as global citizens, they should be pushed to decarbonize, and that of course includes different things, like carbon capture. It includes things like electrifying their operations, et cetera, but I think that's sort of different than moving into separate sectors, although there is some overlap. Thanks.
Thank you, Francisco. Chinedu, please.
Okay, thank you, Patrick. Yeah, so speaking from active participation on the national oil company, two things that we always have to face with when we are talking about decarbonization to management, right? And in the bid where management has a mandate to grow production, one is the compliance issue, where the regulators now, in our own case, the NUPRC, that's National Upstream Petroleum Regulatory Commission, has mandated upstream operations to decarbonize, and in place systems to manage that methane footprint. This is in line also with the national commitment to the Paris Agreement, which is still very active, in our country and driving the NDCs. So you still have for us, and we still have to deal with this regulatory compliance. In addition to that, selling that to management, we'll need to then we'll always have to seek out the value addition that decarbonization, and energy transition has for us. And one of those things then is around how you manage your resources, resource efficiency. So we're able to highlight then things around the flare management, where we can, and the value of oil and gas we can get from those flare management, methane, that's leak detection protection, where we're then able to improve really on our environmental footprint and managing our oil and gas production. So for us, always decarbonization then plays a very strong conversation around balancing regulatory requirements for compliance, investor demands, and then the value that it brings to us. So these are things that keeps this conversation very right for us, regardless of the path that we take in meeting our oil and gas production targets.
Great. Thank you so much, Chinedu. We're coming to the end of the session. I want to give Andrea a last word, including any responses to any questions that we didn't have time to get into in depth, but any final reflections, and then we can close. Thank you. Andrea, over to you.
Yeah, no, well, thanks everyone. These discussions are super interesting and rich, and I'm super excited as well as seeing that there is, every time that we present this research, I see more and more interest from different actors. So I think it just shows that this is a topic that is gaining more interest from different perspectives. I hope we can continue the conversation, and feel free to contact me if you want to follow up in any of the questions that remain in the chat.
Fantastic. Thank you so much, Andrea. One other thing that I want to note, including in response to some of the questions that we didn't have time to get into in detail, is that at the end of the report, you'll see that one thing that we've tried to do is to include a set of guiding questions to help inform some of the consideration that's going on or that needs to go on within different countries with NOCs. So for example, this question around when is there a chance that an NOC might actually be a successful driver of investment in new spaces versus when is it unlikely to succeed? We provide a set of questions to kind of help frame the way in which citizens, governments, and NOCs can engage in that. And so one of the things that we're trying to do in this framework is to help not just highlight the issues, but to say, okay, here's some practical things that within a particular national and business context can be assessed to help move forward. And so thank you all very much for your interest. This is something that we in NRGI, and I know Valerie and Francisco and others around the call are very active in trying to be resources for countries that are going through some of these questions. In Chinedu's case, NNPC is doing it themselves and sparking a lot of reflections. Please don't hesitate to be in touch with any of us if you're interested in exploring some of these questions in more depth. We think they're of critical importance to the future of global energy markets, the climate fight, but most importantly for us, the prospects of sustainable development in so many places. And so thank you very much for your interest, and we'll look forward to staying connected.